Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Smash that like button, subscribe, and if you haven't, and just remember the disclaimer nothing should be construed as financial investment advice, it's just my opinions and thoughts on the markets. And one of the things I wanted to go over today was just so much of it in the news, and why I think this trade war will essentially fail. And this is a topic no one's talking about. It's just the rediscover of nationalism. It's happening in Canada, it's happening in Europe. This isn't the 1940s or 50s where Europeans and Canadians had almost none. Just to show you, look at this. Canadian bottle labels were changed over were what was it? Why can't these things just go down? Were changed over silence on Trump's tariff. So basically, what this was Wayne Gretzky right here. This was on Reddit where people were upset over his wine and sort of not buying them. This is Canadians on they say it's false info, but I don't really believe that. Uh, over his relationship with Trump. So the fact that this is even happening or even thought about it's happening, this is like Michael Jordan being blacklisted in Chicago or like Cal Ripken in Baltimore. But nationalism is that strong where it could happen. So they said staff members said they haven't heard of labels being swapped. Of course, they're going to say that. They're not going to say that. So, but the fact that they're even toying with Wayne Gretzky shows how big this is. And this is why I always say the where it's Austrian economics missing the big bull market that began in '09, or like the Keynesians not seeing the housing markets. This is why schools of economics fail is they don't take in take into fact people's inherent sort of nationalism when they do their economics. That's why they believe in like unlimited free flow of labor or free trade. What we see now is the end result of free trade right now. So that's the first thing. And the other thing is Europe. I want to talk about this. Uh, wish these things would just go down. All right, so here it is. All right, great. People are furious US products less accepted by other countries as Europeans join boycott. And so Denmark, they're very upset. See, right here, buy Canadian instead. So it's happening. Let's see. I want to go. I already covered Canada. I don't really. Look, in Sweden, they're promoting local products and boycotting Americans. Norway, this is happening. Norway actually is no longer selling oil to the U.S. Navy. They'll no longer supply U.S. Navy ships and fuel. So we're starting to see it come in Europe. And the U.S., they talk about the glory days of manufacturing and all that. We used to be a big exporter to Europe. That's not going to be the case this time. And this is why this sort of agenda, how they're going about it, of manufacturing is going to fail. And more European countries are going to join this boycott of goods. And I think over the next 4 years, the trade deficits are just going to explode. Well, I mean, this is the worst, this is the stupidest policy, stupidest international policy I've ever seen. I mean, I don't know. There's been some bad ones in my life. It's up there. We'll just say it's up there. I don't know what's the dumbest. So, and look at this, even Poland, when they tried to raid Ukraine minerals, they're condemning, Polish president condemns the prime minister because they're upset that they have huge copper reserves that they might be willing to allow them to raid Poland's copper. So here it is. This is a big Twitter fight. It's in Polish. So there it is. So I mean, you're going to see big boycotts of U.S. goods. We're already seeing it, but I mean, it's going to expand. And this is going to hurt manufacturing because what you need to have a robust manufacturer's access to safe materials. And right now, with the consumption and everything else, we just don't have the natural resources to do it in America, regardless of the propaganda you read. And I'll just give you an example. This is US oil production. Here it is. We're producing more now than we ever did. They talk about how drill baby drill. We are drill baby drilling. And that's what people don't understand is that this was dropped off because of COVID, but now the Democrats did not want to say they were drill baby drilling because they had to placate to their green environmental lobby. But they did. They did. They just didn't. Biden even said increase capacity. This was 2 or 3 years ago. So that, like, if you look at it here, and this is what people don't really talk about. Permian Basin accounts for all growth since 2020. I was an energy analyst and everything. So the Permian, this is Goldman Sachs. The oil basis is heading for slower growth. So we are going to see, I mean, I think 5 to 10 years from now, we'll probably see lower production or sideways because the new stuff would open up federal leases. It could replace this, but we're not going to grow. So, see, look, last year production exceeded expectations. So, so here it is. Permian is maturing and deteriorating geology will weigh on the production down the road. And the number of rigs are already declining down to September 2023 levels. So they say it will slow. I mean, who knows? It's Goldman Sachs, but they say it will slow by 6%. But the rigs are already at 2023 levels. And so that's all. And this is this is a life cycle. After a couple of months, it goes, then it just slowly declines. So we need access to, and this is why, picking a fight with Canada is not going to be good in Europe. And one thing I wanted to show you, this is a list of imported goods from Europe, from the US. They have motor cars, but it's not all that much. But petroleum oils other than crude, natural gas right here. There are aircraft and stuff, but that's probably weapons. They're going to start making their own. So, like pulling out NATO, these things are going to decline. Medical and pharmaceutical, those might maintain the same, but honestly, they can probably make their own. But look, the number one import by a landslide, petroleum oil and crude. Well, if we're gonna have tariffs on Canada and everything, guess who they can import from instead? Neighbor up north, Canada. And I think that will probably happen, very likely. But there it is. Here's some miscellaneous manufactured items, miscellaneous chemical. Most of what we export is oil to the European Union, but none of that. Norway is no longer going to U.S. Navy, fueling the U.S. Navy. So guess what? Maybe they can consume some of their own instead. So, and one last thing about production and consumption. This blue line's a consumption. We still consume more than we produce. So we're going to we're going to need oil. And Canada was the perfect, neighbor friendly energy independence from anywhere in North of America. But now that's sort of screwed up. And that's going to hurt manufacturing because access to raw materials is prevalent for manufacturing. You can't have a big base without it. So, Anyway, a couple of things I just want to get into. Enough about the trade war stuff. Uh, I keep hearing this story. I'm skeptical of it, but game plan for devaluing the mighty dollar. And of course, they have Trump or whatever. And this is just something that will. And I just want to debunk this myth of we need a weak dollar. It's not really pertaining to Trump, but they want a strong dollar is bad for. People forget when we had manufacturing, we had a gold standard. Land was cheap. We had a gold standard. Land was cheap. The dollar was incredibly strong, 93 or 94 percent higher value. It's lost 93 to 94% of its value. It is access to raw materials. It is cheap land, which the strong dollar does. We don't need a weak dollar doesn't guarantee manufacturing. Zimbabwe would have been a manufacturing within hyperinflation would have been a manufacturing mecca. So this article where they're talking about, and this is why I'm also not hopeful. You don't need a weak dollar. And I'm not talking about like right now the dollar's 108. I'm not talking about dollar on the exchange. I'm talking about a dollar that's so strong that it gives you a low cost of living. That's what we really need in terms of a manufacturing powerhouse, and we're not going to get that. And so, yeah, they have Reagan or whatnot, but this is all the dollar. This article was, uh, and that's all. So, just talking about that, we need a strong dollar, and now that we're gone, thank goodness, done with these were just things on my mind. I'm gonna try to stop and try to talk less about the trade war. It's not really something I like talking about. I think it's overblown by the markets. I think the main reason is the economy's tanking and there's mass layoffs, private and public sector, which are going to contribute. And it's going to cause real big pain, more so than they think. So Warren Buffett here, and I just want to take a victory lap because I was talking about this. The mainstream media wasn't, hardly anyone was talking about it, but Warren Buffett saw the sell-off coming and he hoarded cash. Of course, the press never brought that up. And he says patience is more a virtue, it's a weapon, which I don't know what it means, but sold 134 billion in equities sitting on 334. If you actually look at the market, it was actually up on Friday. I'm just going to go to uh, and right here, Dow Jones up 674, S&P up 117. I think this was sort of a bounce. I don't know exactly what's going to happen, but let's go. I want to go look at this. Look at this. The S&P declined for fourth straight week. And they did have this. This is really good, but S&P 500 declined 2.2%. Nasdaq declined 2.3. Dow Jones 3%. Oil rose 3%, 0.3%. But look at this. Gold 2.6% and silver 4.7. This is very healthy. Gold, I wish they had the miners because what I love to see is gold go up, silver outperform gold, and then the miners outperforming both. And we'll do GDX. See what it was for the week. 5.54. So that's very healthy. Gold, silver, and the miners performing very well throughout the week. 5.4. Let's see what the GDXJ. 0.97. They're like mid tiers more. And generally the majors go first. It's generally the majors, then in the middle of the bull market, the mid tiers, and then the juniors really follow. So, but yeah, if you look at this, very healthy. GDX up 5% this week, silver up 4, gold up 2. Gold in a bull market. And as we speak right now, let's see. I don't want to eat my words. I checked my Kitco app on my phone, but see where gold is because I remember I was talking about see if it broke 300 as I'm recording this on 8:30 Eastern Standard. And nope, it's not above 3,000. So, but yeah, I think the S&P 500, the Dow Jones, they're due for a bounce. Remember, markets do not go straight up. They go and they don't go straight down. They'll go down, have a bounce, go down, have a bounce. And sometimes they'll bounce. If you look at the 2000 through 2010 decade, that was the lost decade. The market declined. But if you actually look at it, the Dow Jones, it crashed. It was known as the tech bubble. And then it went up from like 2001 or 2002 all the way to 2006 and 7. The Dow actually made a new high. And then it crashed in '08 and went up '09 and '10. So for most of those decade months, years, I mean, most of those years in that decade, the market was up. Let's see if I can do that. The market was up. It didn't go down. So, like, if you look at 2007, that was at 10,000. And then 2002 is when it really crashed. The tech double burst, 8 and went down. 2002, 2000. Where was it in 7? I forget exactly. 2002 went down. There was the tech bubble, and then it started going up, up. It made actually a new high in 2007 or 8. 2007 made a new high. It was around 14,000. And then it crashed all the way down. And it was sort of like the lost decade. Instead of at 10 or 11, it's finished at 10,000. It just went sideways. Had multiple crashes. So when and then let's look at the S&P. Let's do a max for 10 years. So in 2000 it's around 1300. Bottoms out around 2001 at 900. This then goes to 15. It goes to 800, 700 in 2009, and then around 2010 it finished at 1,000. So down 400 to 500 points. But you can see for most of those years, it was going up. It's just 1 year it really tanked, and 2 years it really tanked. And that's what I think the 20-year bear market will look like. It will probably look like this from like 2000 and then it'll just go down here. And instead, though, it'll go from like 5,000 to 1,000. It'll just go crash, go crash, go crash. So anyway, that's all. Yeah, gold, it's looking good. There's going to be corrections along the way, and maybe this 3,000 won't hold. I think when it breaks, it's really going to go up 100, 200, 300 points, and then to make a intermediate term top. Miners will blow off, but anyway, let's see what's coming up. We have some interesting data coming up. Let's go look at the economic data before I sign off. I'm gonna go sign off. Coming up this week, they have retail sales tomorrow. See where that goes. Not making any too much. I'm predicting that I don't know what exactly tomorrow's going to bring, but I think over the next couple of months it's going to go down. But like it went down 9% last month, so it could be down for a bounce. But they have retail sales, the housing index, building permits, production capacity. Anything big on Wednesday? Nothing I mean, Fed interest rate decisions. I think the Fed's going to hold. We'll see what happens. Then we have jobless claims, which are more existing home sales. That's going to be interesting. And yeah, so we do have some data coming out this week. And yeah, I think gold, I don't know if it's going to go up this week. It might come down and then, it might break 3,000 soon. But yeah, we'll see what happens. Do a video about the stuff tomorrow. Hit that like button, subscribe. Remember, not financial investment advice. And I'll see you next video.